Okay, so I'm going to move on to Mark now. Mark, I'm going to take your first question about the market sentiment first, and then we're going to go into your question about the blueprint, which will relate to Mike's question about radioactive trading as well. So, second question first, Mark says, curious about the power option market sentiment measurements. Okay, so we use 13 broad-based indicators here to define the market sentiment. From the pod there, you just click on the market sentiment and it takes you here where you can see the different ones. The put-call volume ratio across the market. The number of days SPX has been up or down. The SPX gap over the SMA 20, 20-day moving average, of course. The percentage of stocks that are over their 20-day moving average and the percentage of stocks that are at their 52-week high versus the percentage of stocks at 52-week low, or the 52-week high-low ratio. This was actually bearish yesterday and the day before. That easing off that we saw yesterday sort of moved this bar back away from the bearish fence. We were seeing a really high range of stocks hitting their high on Monday and Tuesday before it slipped. The VIX has actually moved into a bullish because it had that huge run and then it pulled back slightly, so it had a big percentage change. The TRIN index of 10-day EMA, the relative strength index of SPX, SPX days over the 20-day moving average, number of days over the 100-day moving average, gap over the 100-day like we saw the 20. It's percentage of stocks that are above their 100-day moving average. In other words, marks the higher percentage of ones that have been extended long-term growth. We're seeing that moved into bearish. And the MACD gap, the gap in the MACD for SPX. Ernie originally started, I'd probably say with 40 to 50, maybe even 60 different market indicators when it started doing this almost 6 or 7 years ago. The first video I saw on YouTube where I talked about the market sentiment tools from 2013. It's about 7 to 8 years ago. And what he did is he had all of those indicators and he was running them looking at what you can see here, the histogram. This is the occurrences of when, in this case, the put-call volume ratio has hit these levels. And so as you can see, if the put-call volume ratio ever goes up to 1.2, it very rarely goes beyond that. And actually, if it ever gets up to, here about 1, it very rarely goes beyond that. So this triggers bullish when it gets to 0.99, almost when it gets to 1, because small percentages of the time does it ever go higher than that. And so what has to happen if the put-call volume ratio is greater than 1? There's more puts to calls in that case. So how does it reverse? As more calls start to get bought, which pushes the market up, it goes back to a better ratio, and that's why it's bullish when you see it at 0.99. And it's bearish when we hit 0.6, right? Of course, in that case, it makes a lot of sense. We get to about 0.6 here, and I think that was one that Ernie's changed. I think we were originally at about 0.57, if I'm not mistaken. But in any case, at 0.60 here, it very rarely continues down into this range. We're seeing calls continually more outpace the puts in that scenario. So that would be your bearish indicator, meaning that puts are likely to start to get looked at and purchased as well. So that's what he used for all these 60 indicators. He looked at market history, 10, 15, 20 years of market, okay, maybe it's 15 years of market history at that time, back to 2000 and so forth, and looked at where these numbers were and the histogram plots of where these numbers were at market highs and market lows. Where were they before a market turn was triggered, Mark? Where was it before the market started to move back up? How many days did you see before it? Was there a positive indication? And what he did is he originally narrowed it down, I think, to 10 or 11. And then later on, he added the TRIN and I think the MACD gap as well. So there's a total of 13 indicators now that are used. And when those fences are triggered, that's when you see that we're at 2 bearish right now. The put-call volume ratio is bearish. And the percentage of stocks that are over their 100-day moving average is at a bearish line as well. It is currently at 82. And here we see that when it's above 80, that's when the percentage of stocks over the 100-day moving average triggers the bearish move for this indicator. Okay, and as we saw, MACD gap is positive, and the VIX went positive today with the movements of the last couple of days. Okay, all right. So that's what they are in a nutshell. Why are these 13? Because these are the ones that best gave an indication that the market was going to turn. These are the ones that consistently, bullish or bearish, gave the best indication that when you see maybe 4 or 5 bullish and 1 or 2 bearish and the rest neutral, that usually means that we've hit the bottom and the market's going to start to run after a recent correction, after a recent pullback. When we see 6 bearish indicators or 7 bearish indicators and 4 or 5 bullish, 4 or 5 neutral, that indicates that likely we're expecting a correction to come up as well, and we're expecting a decline in the near term. No. So it's a great question, Roger. Roger says, for the market sentiment indicator, does the massive swell in options volume over the last year have an impact on the measurement? No, because it's related to the market ratio, number of puts to calls. Okay, so just because the market volume increased, it means that the percentages of put buyers, call buyers, and so forth also remain the same ratio-wise. So even if it went up another 10-fold, it would still likely be a good indicator to use because the ratio of puts to calls is still correct. It's still valid, even though there's 5 times as more total, 10 times as more. It's still valid. There's nothing that's direct volume. I mean, it is direct volume, but it's not related to, because there's 3 times more options that were traded in the last years than the prior year, this ratio would change. That's the only one I think that's really related to a put or call. The rest of them are related to SPX. Oh, why SPX instead of NDX? Because NDX is kind of its own market. Now, we've talked about maybe looking at some kind of sentiment for this, using NDX for investors that maybe are heavy in the in tech. I had a call with a gentleman yesterday. He actually had lost a lot of money the last month because of the pullback in the NASDAQ. I didn't get in depth into what strategies he was using, but he lost money because he was heavy in NASDAQ. And we talked about looking to maybe protect what he has left if he's going to continue that direction with buying calls on QQQ or looking at shares of the inverse QQQ ETF, TQQQ, I believe, in that case, to act as a hedge against that portion of his portfolio. Okay. All right. So that's what it is. Of course, you can see the sentiment history here. And mine goes back, of course, back to 2020, as we were talking about, goes back a little bit more. If you don't have the historical subscription or the premium subscription, you only see the last year, I believe. But if you're on the premium, which we do for the webinar, so I can access the history for you guys when we want to run something, in that case, looking there. And sorry, I want to go back a couple more. It was in January of 2020. It was around January 12th, 15th. I think we looked at that last week, 2020, when we started getting the stronger sell warnings leading to this 2 weeks later. And then when we hit the bottom, you're at the very bullish buy. And then we had that little correction. You can see it right there. The little downturn correction we had here, September. And that's when you saw that buy. It moved back up, but then you started to see the sell warnings again and started moving strongly up. And recently we did hit this here. And I think that was indication of here, but I'm also hedging my positions and protecting them as well. Okay. All right. So I was going to mention real quick here that I was going to get to Mark's second question, which led to Mike's, but Bill jumped in with a quick question that while I'm here on power options, I'm going to show. All right, Mike. So that's what Mark, I'm sorry. That's what we were talking about with the market sentiment. If you have any other questions, let me know. There's also other videos around in the free webinar section that discuss that as well.